Crop insurers endured a difficult year in 2019, and 2020 so far has had a pile-on effect. To discuss this line of business, the subject of a new AM Best report, is AM Best financial analyst Connor Brach and David Blades, Associate Director, Industry Research. And Connor, we're going to start with you. The report notes that 2019 was the worst year for crop insurers in a decade. What were the reasons for those results?
Hey, thanks, John. Multiperil crop insurers suffered losses in 2019 due to unfavorable weather conditions. Heavy rainfall and historic flooding across the Corn Belt led to a record for the number of prevented planting claims. According to the U.S. Department of Agriculture's Risk Management Agency, there were 72,000 losses due to excessive moisture conditions, which resulted in over $6 billion of indemnity payments to farmers for the year. On the private product side, crop hail writers struggled as well due to significant frost and hail activity during the growing season, as well as inadequate pricing.
David, have these challenges been exacerbated in 2020 given the pandemic and weather events?
Well, John, no question the challenges have definitely been exacerbated for MPCI companies. Weather events have definitely affected the 2020 results so far. The early August derecho that passed through Iowa specifically caused extensive damage in that region, with nearly 1/3 of the crops being destroyed or damaged to some extent. The storm was concentrated in sort of a 45-mile wide region of the state to the west of Des Moines, going out towards the Quad Cities. And while the impacted area included areas containing both soybeans and corn, the corn crops definitely seemed to suffer more damage, so that the insurers of crops in that area who were more concentrated in corn seem to have been impacted the most. From what we understand from speaking with some rated MPCI insurers, the way that the storms hit the crops, some of the stalks were broken off at the root, while others were, kind of simply laying over. So there were some differences in terms of the extent of the damage. All of this kind of added to the challenge of calculating the ultimate yield losses for the year. So again, we're going to continue looking at that and looking at the information we get from those companies. Based on the way that the MPCI program works, the majority of the losses are expected to be retained by the states, the approved insurance providers as per the 2020 standard reinsurance agreement. Now, those providers with the largest percentage share of their respective MPCI book in Iowa will probably be hit the hardest, though. Although windstorm events are common in Iowa, this one was particularly severe. Then you have Hurricane Laura that obviously made landfall, I think, on August 27th, I believe. And when all is said and done, it's expected that the damage to crops will be extensive in the states of Louisiana and Arkansas. Excessive moisture that, due to the considerable rainfall that was associated with that storm, created significant challenges to rice and corn farmers specifically. The crops that were damaged or that were not fully matured by the time that the hurricane hit are the ones that could lead to the sizable losses. Then you also have the ongoing wildfire activity in California and the Pacific Northwest region that pose a threat to crop hail insurance writers, specifically from the standpoint of crop harvest. So in particular, the wine industry, as we know, in that area is acutely impacted and is at significant risk as basically smoke and ash sort of hangs or lingers over the grapes. So, similar to the situation with Hurricane Laura, it's too soon to be able to estimate potential insurance damage with any clarity. But given the severity of the wildfires, the losses could be extensive. The bottom line is that the recent catastrophic weather events has complicated sort of AM Best's overall outlook for the remainder of 2020. Prior to the weather events, the expectation was that 2020 would represent some sort of improvement over 2019. But while we'll wait until the year fully plays out, see how much profitability of crop insurers is compromised by the adverse weather activity, and commodity price volatility. Again, the expectation is that they will have a meaningful impact. And then finally, you mentioned the pandemic. The COVID-19 pandemic, has also impacted the MPCI market as demand for products initially increased, following the onset of the pandemic, as consumers, rushed out to the stores and bought out products. But subsequently, on the flip side, the decrease in demand from restaurants, from universities, from hotels was very dramatic. And the decline in driving associated with, shelter-in-place orders, has decreased the demand for ethanol, particularly, which has led to a loss in demand for corn. As we point out in the report, approximately 38% of the corn that's produced in the U.S. is used in ethanol. So similarly, what we'll see in losses, it will play out over time, but it's something that's definitely had a meaningful impact on the 2020 crop results.
Are there government backstops, Connor, to help insurers in these difficult times?
Yeah, John, the multi-peril crop insurance market is unique in that it's a government-created program that's being delivered by the private sector, with the risk being shared by both parties. So the government provides support primarily through both subsidies and reinsurance, as outlined in what's called the Standard Reinsurance Agreement with the approved insurance providers. And so premium subsidies cover a majority of the approximately $10 billion in premium. And in addition, the government also provides with administrative and operating expense subsidies to insurers, which help cover the cost of delivering the program to the tune of $1.6 billion in 2019. The SRA, the Standard Reinsurance Agreement, also grants crop insurers the ability to cede policies to either the commercial or assigned risk funds in each state, with varying degrees of reinsurance protection available, depending on the fund designation.
David, to what extent do federal trade deals filter through and impact insurers?
To answer that, John, we can look at the trade wars that the U.S. has had with China specifically, all right, in both 2018 and 2019. Look at those disagreements had an adverse impact on farmers. The U.S., raised its duty tax on goods from China in the summer of 2018, and then China retaliated by imposing a 25% retaliatory tax on the U.S. agricultural products such as soybean, wheat, corn, and other dairy products that were sold to private Chinese companies. So the result was that some of these companies started to look to other countries for their soybean purchases in particular, for example. So, the extent to which we've kind of gotten past that, and the soybean farmers have kind of gotten the relationship with those Chinese companies, those private Chinese companies, back to where it was beforehand. That's still, again, playing out. I don't know if they've gotten back to that point yet. China's a very important market, for soybean farmers, so that the trade war with that country was very impactful on the farmers, of that product. And then, given the especially large soybean crop in 2018, farmers had to basically drop their prices in order to stay competitive, and that also hurt their profitability. So it takes time to repair those relationships with those customers that felt compelled to seek out other sources for the crops that they once were purchasing from these U.S. farmers. So there was definitely impact from that standpoint.
Connor, are there steps that crop insurers can take to mitigate the losses?
Yeah, crop insurers are attempting to gain scale and geographically diversify their books of business while also refining their view of risk through modeling in order to optimize their fund designation strategies. We also see crop insurers acquiring or partnering with agricultural technology firms in an attempt to improve the resiliency of crops through data and analytics, including precision agriculture techniques. Finally, we see third-party quota share, excess of loss, and stop-loss reinsurance, as well as crop derivative contracts being utilized to further manage risk.
Thanks, Connor. David?
Thanks,
Welcome, John.
That was AM Best financial analyst Connor Brach and David Blades, Associate Director, Industry Research and Criteria. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.